Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can understand what we see in the global landscape. As you probably know, the Fed has decided not to raise interest rates last week. I firmly believe they should have raised interest rates simply because the U.S. economy is doing pretty darn good. We're growing. We should be doing better, but again, blame that on bad policy by our politicians, which ultimately slow our U.S. economy. But the economy is doing well. We see no signs of recession. Unemployment's doing well. Initial claims for unemployment are doing better. We're seeing auto sales, home building permits, all the things that contribute to a good U.S. economy are intact. We don't have overheated economy. We have a good, solid economy that appears to be getting slowly better. Hence the reason I feel the Fed should have raised interest rates last week. They may raise them in October, and when they do start to raise them, they're going to raise them very slow and methodical, as they've indicated, and if needed, they can always reverse course. We're at basically zero interest rates. They need to have dry powder in the keg because, folks, eventually we're going to have another recession. While our recessionary indicators show no signs of recession currently in the U.S., and we can look at that crystal ball pretty good for about 9 months out, we may have one in 5 or 6 or who knows, 10 years from now. We need dry powder. Higher interest rates, they can bring them down, stimulate the economy, come out of recession. Remember, recessions are the pause that refreshes. It's like exercising. You pause, you re-energize, you're stronger, you're faster. We don't see recessions. We see good U.S. GDP growth. The quarter is almost over. We're expecting good corporate earnings ex oil. As most of you know, when you go to the gas pump, it's costing you about half what it did a little over a year ago to gas your car up. Gas prices are way down. I think gas prices will stay lower than normal for the foreseeable future. That helps the consumer, and it helps over 80% of businesses. I think the year is going to end with a bang on the upside. I firmly believe that oil is going to stay low. Don't see signs of recession. I see GDP growth somewhere in a 2.5% full year for 2015. And I ultimately believe the world economies, while they're being volatile, and so are we, some of that will subside as we get into the fourth quarter of 2015. Remember, long-term investing requires patience and discipline. Nobody ever wants to see volatility. Nobody ever wants to see a negative quarter. But the facts of life are this. You're going to see it, and you're going to see it in the future. If you're a long-term investor, whether you're 50, 70, or 90, ultimately you're going to see short-term volatility, which usually leads to long-term gains. If you're a client of our firm and you have any questions, call my office, talk to me, schedule a consultation. If you're not a client and want to become a client, call our office. Maybe it's time you became a client. Make sure you have yourself a safe and profitable day, and listen to my TV and radio shows this weekend. Have a great day.